All right, here we go. Stocks by the numbers, welcome back. And we are looking at the three major indices today that obviously, as you see, have fallen off a cliff. We're talking 3.9% here on the Dow, 4.7% here on the S&P, 5.25% on the Nasdaq, down over 1,000 points, Dow down 1,600 points. This is the result, and I know people are clamoring, oh, Trump's tariffs, see what this guy is doing. Let me explain something to you. Anything that this man would have done would have caused markets to drop, in my opinion. I have said this time and time and time again. If this is new to you, I'm very sorry, but again, I've mentioned this multiple times on my channel over the last, 12 to 18 months, talking about the BS fake market pump that we saw under President Biden as to why now we're going to see a contraction. You are going to see a drop, and they can label it a recession if they want to. Markets are down 10%. Obviously, they're going to say whatever the heck they want to say. But at the end of the day, to think that, look at this, to think that this is normal and this is not, shame on you. Shame on you. I was looking for a 10-15% correction, and again, that was like back here. So now, in my opinion, I'm looking for like a 25%, 30% correction, believe it or not. But I just wanted to draw out a couple of trend lines because all I keep seeing is people on CNBC, people on X, everyone's tweeting out, messaging, oh, buy the dip, buy the dip. That's what's trending. Ironically, the phrase stock market crash is trending, while the phrase buy the dip is trending, which is technically impossible. But anyway, we have the whole community saying the market's crashing. We have the whole community saying to buy the dip, apparently. So let me just break down a couple of these trend lines I'm looking for, because in my opinion, there's blood in the water and it's only going to get worse. And I said this again, time and time again. You can see now something like the VIX. What I always say, don't know what to buy? Buy the VIX. Wake up today, VIX is up 30-something%. Bada bing, bada boom. So let's look at some of these trend lines here that are all the same color and they're confusing me. So let's go all the way back here. Let's make this one blue. Bang. So you can see that is going from the low of the low during lockdowns, third week, March 2020. Coming up, connecting to this next low, October 27, 2023. Cutting across, boom. That's that blue line right there, okay? So that would show us about 130 points to go on the S&P. And again, that's just to this trend line. And then we'd probably slowly break down to the following support levels as well. And now this trend line here, we can see is going from the low of October 13, 22, touching up to that low right there again, end of October 23, boom, that comes right there, slightly lower than that 5-year support trend line. And then, of course, we have from the next low there, March 13, 23, connecting to that low again, cutting across, and you can see, boom, we are down here even further at sub 5,000. And if you don't like to look at the S&P and instead you like to look at the ETFs, well, guess what? It's the same freaking thing. So even if we go back here, since it follows the S&P, right? So if we go back here, the middle of October 22, cutting across to those bottoms there, third week of October 23, cutting up and across. This was posted in the Discord just recently. Again, Discord, free for you guys to join. Expired link in the description to keep the bots out. Simply request a fresh link in the comments and we will get you in the Discord. But you can see that I pointed out that this first support trend line was going to be about 549, high 548s, which is exactly where it dropped to. Had a little bounce back to the 20-day and then broke below it. Hold on, let's check what the daily high was. Just about 548. Too damn good. So now we have a dip straight down below this support trend line. So why is everyone saying to buy the dip? Because they're looking at these exact technicals that I just drew out for you. So all of these spazzes are saying, step in today, buy the dip, market's going to pop back up, retest that trend line tomorrow. Now, what they're not telling you is, in my opinion, bang, bang, you have to be in and out. This is not the V-shaped recovery and I'm going to buy now and in 2 weeks I'm going to be up 90%. In my opinion, that is the exact opposite of what is taking place. And remember, if markets really need to come back down to reality and fall back down to earth, then them telling you and everyone else apparently to buy the dip is actually helping to sustain the market. Which also means you have to keep in mind that if you're locking yourself in now and we see a short-term relief bounce and then we tank back down to the next support trend line, you're the one that's going to be screwed because you got in up here. So that's why, in my opinion, these are some levels that I'm watching. And I even tweeted out again, add stocks by numbers since the whole thing doesn't fit. If you guys want to follow me on X, it's entirely your own prerogative. But I tweeted out earlier, just like I mentioned in the Discord, that I feel that this is just the beginning. I feel that more red is coming. And the fact that you wake up on a day like today and you have, again, people on social media, on X, people on stock twits, analysts coming on CNBC telling investors to buy the dip. That usually, from my experience, that usually is a very bad sign, which is why I feel that I don't think I ever remember analysts on CNBC or Bloomberg News or Fox Business, all these other channels that I used to watch. I don't personally ever recall anyone just coming out blatantly telling investors to buy the dip. And that's why the fact that they are doing it, in my opinion, leads me to believe that there is more red coming. There is blood in the water. This is nothing. Again, this is nothing. And the reason why it's coming down so much is because it went up so much. And I was saying this time and time and time again with this fake BS pump rally as economic data was suffering. And people said I was a pessimist. People told me I don't understand the market. I don't understand stocks. I should get a different job and yada, yada, yada. And now you can see next trend line looking like about 515 and a third. Let me turn that off. Looking like about 515 and a third on the Dow. On the SPY. Now, even if you come back here, look. See this dip, right? We had the big bounce off the trend line, our first low. We came down, came down, broke the 20-day moving average, caused a bigger bounce. So that right there, in my opinion, minimum should be where the S&P goes. Or SPY, I should say, whatever. And what is this? 518 and a third, roughly. 518 and a third, roughly. We come down. We try to get back and show some life. People will pile in thinking the worst is over. We will then reject and come down here. And we will meet up at this key level, in my opinion, 518 and change, and potentially this support trend line here of about 515 and a third. I said time and time and time again that we will most likely see a red first year minimum under the Trump administration. And again, people want to talk about tariffs. I mean, you know, we knew about his tariffs for a while. We knew about his tariffs for a while. And if you notice, we kept climbing. So the fact that now the guy actually did what he said he was going to do, and now there's some tariffs implemented, this, in my opinion, is an overreaction based on the supposed catalyst that the media and the average investor is propelling online. But that's just me. That's just my opinion. If we switch over to the Nasdaq, again, the Nasdaq was the biggest fake index, of course, as all the money flowed into the tech sector. However, if you recall, I personally wasn't expecting an entire fake market pump for 4 years. However, I did say years ago that under Biden, just like it was under Obama, the best performing sector was going to be the tech sector. And obviously that came to fruition. But long story short, as we know, what goes up must come down, and stocks go up like escalators and down like elevators. And in my opinion, again, even going from the tops here, if you want to get creative with some of these trend lines, that's July 19, 23, going to that top right there, November 29th, 23. So even if you cut across the tops right there, you can see you're still technically below this fib of about 17,222. Meaning that the Nasdaq can easily shed at least 1,500 more points down to 17K. In my opinion, it technically needs to come back here. And this trend line here, as you see, is the bottom from lockdowns, third week of 2020, connecting to those lows there, January of 2023, coming up and across, and you can see that right there is about 15,850. And of course, with the other trend lines and the other fib levels, we technically can continue to keep slipping through there to about 15,300, which in my opinion should signal a gap down even further to about 13,950, as you see here. So in my opinion, we really should get to about 14K. And if we come down here as well, you can see where the index ran up to and then consolidated into this channel here. If we go kind of mid-range of this channel, you see you're looking at about the low there, 14,557. In my opinion, that technically is where this index should go. Will it happen? I have no idea. Realistically, should it happen? The answer is yes. The answer is yes. And again, everybody was busting my chops back here. This entire time we were rallying when I was saying we should technically be cratering. And again, people keep buying, and all it takes is one or two catalysts, you know, and then all of a sudden, boom, everyone starts to hit the sell button, everything starts to drop. The funny thing is about the Dow, this is one that you have to keep an eye on now, because if we go here from our lows, again, third week of March 2020, coming up touching those lows right there, end of October 23, you can see that the Dow has come down literally almost right to that trend line. Markets are about to close, and we can see technically we did just dip below that trend line and should technically close below it. But yeah, markets are closed now, so we technically did just close below that key trend line, which means, in theory, again, people always tell me, oh, it's all about the technicals, not about the fundamentals. Well, guess what? The technicals are showing that this is just the beginning. We have broken support trend lines. Next drop down, in my opinion, on the Dow, you're looking for at least another 2,000 point haircut, which would bring you down to about 38,700, roughly. And again, you can see how we came down. Looks like we bounced. Actually, wait a minute. Okay, here, maybe here, across the tops. Yeah, see, fears Trump's tariffs will trigger recession. With all due respect, our economy was already in a recession again under Biden. I don't want to hear it. I don't want to hear it. You guys can cry to me all you want in the comments section. I do not want to hear it. Our GDP was suffering, markets continued to climb. Our unemployment was suffering, markets continue to climb. Now everyone's talking about the price of eggs. Meanwhile, for 4 years, we were all talking about Bideninflation and Bidenomics, which caused prices to skyrocket like crazy. But now people want to try to throw the price of eggs in my face. If you weren't paying attention for the last 4 years, I don't give a crap about what you're talking about for the last 4 weeks or 4 months even at this point. Honestly, it's falling on deaf ears. So the fact that, think about through these years also, markets were waiting for the Fed to lower rates, right? Remember when we used to wake up and everybody was waiting for the Fed rates? Over the Fed decision, are they going to lower rates? Are they going to keep rates? What's going on? What's going on? Everyone's banking that they would lower rates. They would come out and say, everything still sucks. We can't lower rates yet. And then what would happen? The markets would jump and the Nasdaq would close up 500 points that day. Dow would be up 700-800 points that day. Even though technically the market in theory was waiting for a Fed rate cut, that never actually happened, yet it didn't matter, and we swept it all under the rug and just continued to pump up the value of the markets. Again, you go back to the major indices from 4 years ago under the Biden administration, major indexes are up 50% in just a few years. And I kept saying that is not realistic, and it will come crashing down when everyone least expects it. And now again, we technically have the Dow right there at the trend line, technically did close below it. It should keep dropping. Nasdaq again was up the most, so should technically continue to be in free fall, 17,000 and down into the 15,000s in my opinion. And we just looked at the Dow, right? And the S&P, again, the same thing. Expecting big drops here, several hundred points, in my opinion, going to keep coming. The few bright spots, as you see, we had a couple of Dow components like Verizon, VZ, and of course Philip Morris, one of my favorites, PM. You can see up almost 4% today. Verizon 2%, going near highs. Verizon, we can see recently up to 47 and change. It's holding, it's continuing to climb. Someone asked me the other day, actually, what do I feel is going to perform well if markets do begin to sell off? And I actually did say telecom and materials and metals, in my opinion. But VZ has been holding steady. PM actually hit new 52-week highs today above 163 on this price target upgrade. There we go. Deutsche Bank increases price target from 142 to 170, maintains buy rating. I said again many times, PM was a powerhouse also. I tried to let everyone know. I would do a video on Philip Morris, you know, the damn thing would get like 40 views, and it would break my heart. Because essentially, again, I knew what was going to happen, and not many of you were excited about it, or looked for it, or whatever. But that is pretty much what I wanted to say. But yes, the markets came down big. So why did these Dow components see green today? Well, it's because of their dividends, right? It's because of their dividends, because of their dividend yield. So even with PM pumping, we're getting a dividend yield of about 3.5%. If you recall, like back here, it was like 5.5%, which is why I kept talking about it. And something like VZ, again, same thing. The yield dropped because the stock price dropped, and even with the stock price heading back up to the high 40s, potentially 50 plus, where the stock was historically, you can see we're still getting a dividend yield of about 6% with a very, very low PE. So the investors today, they went hunting for brand name stocks that were beaten up, that were undervalued potentially in the fundamentals, that also paid out healthy dividends to help offset any potential sell-offs that they can be seeing in the markets as a whole. So smart money will continue to be smart. And again, you just have to try to plan accordingly. I know metals like gold and silver were absolutely raging, so they took a big hit today. Silver obviously more than gold. And oil, unfortunately, pulled right back, straight down, as you see, back below this trend line. The USO calls were working out beautifully. It was on its way back to 73 plus a barrel, and now we tanked down. You can see right to basically that fib, just missing by a few cents, and then having a little bounce. So we'll see what happens with our commodities, but I did try to warn people. And again, I know some people say, well, you said, you know, we were going to drop and markets kept going, so how are we supposed to know? Again, if I knew exactly where an index was going to stop and when it was going to break and when the real correction was going to take place, I would have been retired about 15 years ago, right? We have to call it like it is. So at the end of the day, we know no one's ever going to be 100% correct. But this is why I did try to keep warning people that markets are up more than they should be. Big drops, big corrections could be coming. I mentioned that, again, we would have probably a red year under Trump the first year out. I said it's going to get worse before it gets better. I tried to tell everyone to keep cash on hand. I tried to tell everyone to not be overexposed and fully invested. And I tried to remind everyone that you really shouldn't have more than 10, 20% into one given position. So hopefully no one is getting too smacked around here on this sell-off. But yeah, those are the trend lines I'm watching. And again, as you see, technically in the technicals, we are setting ourselves up for another potential leg lower. So again, everyone's trending by the dip. This is what we want. You know, you're welcome. And in my opinion, I think it's just getting started. But that's pretty much it. I'll end it there. Once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.